Hello, my name is Lester Santos. I'm a financial analyst and it's a large tech company. I recently got your email and decided to meet with you. You have been a great help ever since you got hired in this hedge risk. However, I understand you might need some help understanding the technical terms of investing. Well, let's start. I'll be happy to help you understand stocks and bonds, and most importantly, their nature. Stocks are ownership securities in a company in the form of dividends. We are able to make profit off of them as our company is able to raise money and spread ownership to investors. That also includes spreading risk around. As stated before, we issue stocks in the form of dividends. However, there are many different types of them. For example, there is the cash dividend. This is where a trusted board of directors pays a certain amount in cash to investors holding that type of stock. Stock dividend. This is when the value for shares is issued by the market value of our company's stock. In other words, it's their stock value in the stock market. We are very big, so our company game changes constantly in its value. With the new release of products, we're able to target customers and investors. Property dividend. This is not necessarily monetary, but rather the distribution of assets in their market value. There's also scrip dividends. This is the situation where we do not have enough funds to cover for the dividends of shareholders. However, we promise to pay them back at a later date. This helps build trust. Liquidating dividend. This is where we return capital back to shareholders as a dividend. We do this a lot. As you know, our department works in hedge risk, where we buy back and sell stocks that we initially borrowed. Now, I particularly heard you wanted to discuss stock splits. This is simply where we increase the number of shares. To raise more money, only individual stocks are lowered in value. Now, if you don't have any more questions regarding stocks, we'll move moving on to bonds. Bonds are legal obligations, and they are debt obligations. This is where investors buy bonds, and we make a legal commitment to pay them back at an interest rate. It sounds like a hefty responsibility, but we do this to raise money for financing for many operations. Now, for example, we took a $50,000 bond. We took this $50,000 bond at an interest rate of 5% and hope to pay back in the next 20 years. At the end, we will have to pay around $79,000. That is almost $29,000 in interest. You can see why bonds are a big responsibility and why our bonds should be reputable. Bonds are a great and safe security for a company, but our company image needs to stay strong to retain investors from losing trust and investing in other competitors. Big companies like us invest in stocks and bonds, but many securities are attractive, and companies should invest in stocks and bonds if they're able to. We can take less risky investments to keep our assets safe. Some of these include company bonds, dividend-paid stock, and even saving accounts. The world of investing with stocks and bonds keeps our game up, and provides us with great image across the world. Stocks are ownership, and we pay investors in different types of dividends, whilst bonds are debt obligations that we promise to pay back. If you do not have any more questions, feel free to email me. It was great meeting with you.